I've made millions of dollars investing in crypto, but I've also lost millions. And the reasons were so simple. They could have been avoided. So today I'm taking my 7 years of crypto knowledge and experience and condensing it down to the 20 things I wish that I knew when I was first starting out to help me get to those millions faster and avoid the mistakes that I made. By the way, this is the Idiot Genius channel and I'm Matt Stefanina. I built several YouTube channels to over 1 million subscribers, but this is my brand new one focused on investing in crypto and helping you make money. So if that sounds like something you're interested in, hit that subscribe button, hit that bell, turn on notifications, and let's get started. The first one is price doesn't matter. If I had $1 for every time someone told me I'm buying Dogecoin at 39 cents instead of Bitcoin at 92,000 because it's cheaper, I would be a very rich man. I actually had a really intelligent friend say to me the other day that he's buying Dogecoin at 39 cents because it seems like it would be easy for it to get to $10. Guys, the thing you have to take into consideration along with the price is the token supply. The reason Bitcoin is $90,000 is because there are only 21 million Bitcoins. There will only ever be 21 million Bitcoin. It cannot be increased. And so therefore, every time someone buys some and takes it off the market, the price continues to go up. That's why it's so valuable. Dogecoin, while it's an arguably great project, is 146 billion tokens. And there's no cap on the supply. That can continue to change. You have to understand that tokens can either be locked like Bitcoin, they can be inflationary, meaning they're creating more tokens, or deflationary, meaning they're lessening the supply of tokens. And that's something really important to understand along with the token supply. So saying that Dogecoin is going to go to $10 is absolutely insane. Instead, what you want to do is look at the market cap and look at the token supply. Right now, Dogecoin is sitting about $58 billion in market cap. That means the total amount of money invested into Doge is 58 billion. So what you have to ask yourself is, in order for it to go from 39 cents where it's at up to $1, that's nearly a 3x. Do I think that another 58 plus 58 billion, another $116 billion will get invested into Dogecoin? That's what's going to push it up over $1. And that's really what you want to be thinking about rather than looking at the price at face value. Number 2 is to stick to category winners. So often people will get into this thing of, oh, I think gaming is going to do really well, or metaverse coins or AI coins. Great. And then they buy some random AI coin that their friend told them about that doesn't even have a legit website. It's way too risky. When you're starting off in crypto, you want to stick to the bigger projects. You might not get the crazy gains, but you're also not going to drain your wallet. And in the beginning, it's really important to get those initial few X's, those few multipliers that help you get a bigger stack that you can reinvest. Once you have some gains, once you're dealing with house money, then you can take some of that profit and gamble it on riskier coins. But out the gate, you want to stick to the category winners. You want to be smart with your initial investment. Number 3 is to understand the myth of crypto cycles. Now, there is some truth to cycles, right? We've seen in the past about every 4 years, we get a bull run, we get a crash, and then we get some sideways sort of choppy trading for a couple years. That does tend to be true. But here's the thing you have to understand. People will prey on this idea of market cycles and they will buy ahead. They will pre-buy the cycle. They'll pre-buy the trend, the chart, and then they'll talk about the chart and they'll feed you the chart and the trend and the news and the cycle, knowing that they've already gotten in and they're actually pumping their bags. So it's not to say that cycles and trends can't repeat and that they're not true, but you need to understand that sometimes when you hear information, it's coming from a biased party. And you want to make sure that you're also doing your own research and thinking your own thoughts. That leads us right into number 4, and this one you can make a lot of money on, and this is buy the rumor, sell the news. One of the best examples of this is last cycle when Elon Musk went on SNL and Doge pumped to the moon. I think we had a 10x in just a matter of weeks, right? But what happened right after that? As soon as he got on the show, not even after the show, as soon as the show started, Doge started to crash. Now, why did this happen? Everyone thought Elon was going to go on SNL, he was going to talk about Doge, and millions of people all over the world were going to hear about it for the first time. They were going to buy it, and we were going to go even higher, right? That's why it pumped. But what actually happens is the smart people know that that's a really good story. That sounds really good. It sounds like something that would work. And they know that people are going to believe that. So they're buying the week before SNL. They're buying 2 days before SNL. when all the tweets and the news and everything, is Elon gonna talk about Doge? Prices pumping, prices pumping. What's he gonna do on SNL? Doge? Prices pumping, prices pumping. Elon gets on SNL. It doesn't even matter if he talks about Doge or not, because the people holding the coin are smart and they know that they already made their money. They're already up here. They're not taking the risk anymore. And so boom, they dump it and it goes down. Now, how can you make money on this? You have to be the person that's thinking ahead, that's getting in over here before SNL airs. You have to be early. And so when we're looking at things, big events in the world, politics, the election, a big fight, a new tech that's releasing, all of these things, you want to be paying attention then and investing early so that when the story comes out about the new AI, that's happening, you're already invested and you can use that news to help you ride those gains up. And then don't forget, when you do get that 5x, that 10x, take profits. It's okay to leave some money in for the moonshot just in case it goes crazy, but make sure if you made 5x, take 1 or 2x's off the table. Get your initial investment back. If you made 10x, take 30%, 40% off the table, put it into safer projects. That's how you build a stack and avoid risk and avoid those big drawbacks like I had when I was first starting out. Number 5 is taking those wins and doing what with them? Where do you put them? Okay, I took profits. What you want to do anytime you get a win, and trust me, if right now you're like, yeah, but I don't even have any wins, you're going to get wins, and we're going to get to those strategies later in this list. But it's really important to know that when you have these wins, which you're going to have, especially if you stay on this channel, because I got you guys, you have to funnel them back into safe projects or take them out of the crypto market altogether. Because at the end of the day, this market cycle is crazy. And crypto, no matter how high it goes, it's going to crash, and it's going to crash hard. And unless you're zooming out and you're thinking of this as a 10-year investment plan, you want to make sure you take money out of the markets, put it in real estate, put it in gold, put it in a savings account, something that's earning good interest. But while we're here, we're earlier in the cycle, I'm personally not doing that yet. I'm keeping my money in the crypto markets. And what am I doing with my gains? I'm funneling them back into Ethereum, into Solana, into AVAX, into the safer projects that I believe long-term will do 2x, 3x, maybe 5 or 8x. They're not going to do 100x. Ethereum is not 100xing. It's not going to happen. If anyone tells you that, immediately unfriend. If someone tells you that, they have absolutely no idea what they're talking about, okay? But Ethereum is likely going to 3 to 4, 5x over the next year or two. So if I get a big gain, I'm going to take some of that out, put it in ETH, put it in Solana, and let those bags continue to grow at a much safer clip. Number 6 is to avoid trading in choppy markets. This is one that so many people fall into because being patient is key, but let's face it, it sucks. I hate waiting, but sometimes when the market is choppy, and what I mean by choppy is it's going down a little, up a little, down a little, up a little, down a little. It just keeps sort of doing this. And sometimes it's a little lower and you're like, is it gonna crash? Sometimes, oh, it's gonna, but it just sort of is in this trend of sideways. When that's happening, you do not want to trade. It's okay to buy and hold, but if you try and buy and sell these little dips, they're so difficult to time. It's not worth it. And most of the time you're gonna end up losing more than you gain. So when the market is sideways, when the market is choppy, find your conviction plays and turn off notifications for a day or two. Go outside, meditate, take a walk, take a breath. And we'll go back to trading once we see some clearer indicator signals. Number 7 is to stay confident in your long-term positions. On this channel, I'm gonna help you guys find amazing projects that we're investing in for the longer term. Now, long-term in crypto could be 3 to 6 months. It doesn't mean we're holding this for years, but so often people get distracted by the new shiny object in the room that just 10x'd in one day, right? But what you have to remember is that for every one of those, there's another 100 or 1,000 that crash, that people lost money on. So don't get distracted by the shiny object. We're trying to get 5, 10, 20, 30 X's on projects that are safe, that are doing real things that we can rely on, that are less risky, because remember, it's crypto, not financial advice. Anything you hear here, not financial advice. Everything is risky. We all know that. But we are going to find the safer projects, and we're going to have to be patient. And it sucks, especially when you see other things going crazy. It sucks to hold your positions. But if you're constantly chasing the pump, you're going to miss it when your projects do pump. You're going to have already sold out of them, and that's a much worse feeling. Let me tell you from experience. But where you want to buy is when you see good projects that have been going up a bit start to dip. Those are good entries. And a really key indicator of a great project is that as the market is starting to tick up, it has a natural dip, and a natural dip in crypto could even be 10, 20, 30%. That doesn't mean that the project sucks. It doesn't mean everyone's leaving and selling. Remember, crypto is a very PvP world, which means people are selling and buying very actively. So if something goes up 80% and then dips back down 30%, that likely means if it's a good project, a legit project, that's a great dip to buy, a great entry if you believe long-term that that project is going to go up. So try to avoid the FOMO buys. Try to avoid buying on the day where you see the boom, the 60% green candle. Wait for it to settle, wait for a better entry, buy there, and then let's ride up the next one. Number 9, and I wish someone had told this to me, man, is be careful where you get your news. On Twitter, on YouTube, on television, everyone has bias. And what you want to find, creators that disclose the projects they're holding, the projects that they're being paid by, that they have partnerships with, because otherwise you just never know who has bias. Are they telling me to buy this project because they were paid to do it, or because they invested and they genuinely believe in it? It's a very, very big difference. And in this industry, like all industries, there are bad actors. So it's really important to consider where are you getting your news. Now, Twitter, YouTube is a little more obvious, but let me tell you one that I fell into is my friends. And they didn't do this maliciously. They wanted me to make money. They wanted to make money themselves, but they would get a tip from a bad actor. They would buy in thinking that it was a great project. They would be like, man, you got to buy this. I heard it's going to the moon and this and that, and it's got this tech and AI and all the buzzwords. And I trusted them, not knowing that they were uneducated on where they were getting their information. And then the project would rug, it would tank. I would be like, what happened? They would be like, I don't know, this guy. And I would look to see who had told them about it initially. And I'm like, oh man, you trusted that guy, you know? So even your friends, your family members, anyone that is giving you advice or thoughts or this tip that they heard on, you want to question it. You want to research for yourself. Always do your own research. And that way you can know confidently what you're buying into. Number 10 is that utility is a buzzword. And there are so many buzzwords in crypto. I keep saying AI because that's the big one right now. What does utility mean though? Utility means you can use this token to do something. What is something? I'll give you an example of good utility. Good utility is you can use this token to buy skins in a video game, to unlock new characters or levels. That's great utility. People are already doing that, right? In Fortnite, you buy V-Bucks, you can use V-Bucks to buy skins. So if V-Bucks was a token, that would make a lot of sense, right? But people will show you all types of utility that doesn't actually make sense. So when someone tells you a piece of utility that this token is going to be used for, ask yourself, would I actually buy a token to do that thing? And if the answer is no, stay away from it. Other buzzwords, like I said, AI, metaverse, all of these things are great. They're popular for a reason. They're trendy for a reason. But you have to be aware that people will leverage these trendy buzzwords to get you to invest. So when you hear them, it's not a red flag, but it just means you need to do a little extra investigation into the project. Number 11 is to explore altcoin categories. Now, this is something that you can do on things like CoinMarketCap and CoinGecko. You can click into categories. So for me, I love gaming, I love AI. And so when I click on the gaming category, I can go down and see all of these different projects that are in the gaming sector. I can see the price, I can see the market cap, I can see the chart, what they've been doing, but more importantly, I can get their socials. I can go to their Twitter, to their website, to their YouTube, and see content about them. When people talk about doing your own research, it doesn't mean just watching one YouTube video and blindly aping into anything that that YouTuber says. It's this type of thing. It's going in and seeing, going back through the tweets, seeing the comments and the replies on a video or on a tweet. Does it seem real? Or does it seem botted? Is there really a core audience that just loves this project and supports it? Is the game out if it's a gaming project? Is it available? If it's an AI project, who is the team? Are they real? Are they legit? So many things in this space are vaporware. They don't really exist. It's just one guy kind of creating everything. So even looking at the CEO, the CFO, the COO, look them up on LinkedIn. What have they done in the past, right? Those are the things that give you an edge in crypto. It's not the fun, it's not the sexy parts, but it is really important. Now, I will say following some great YouTubers and accounts on Twitter can go a long way. And if you don't have the time to do this level of research, one hack is to just follow several different ones that are not friends, that are not homies, that are not constantly retweeting each other. And then you at least have some reference points from different perspectives and point of views. And if they're all lining up about a project, that's a much better indicator than blindly following one account. Number 12 is understanding decentralized exchanges versus centralized. So centralized is something like Coinbase, right? It's centralized, it's run by a company, it's all very regulated, it's also very easy to use. It's pretty safe in the sense that it's difficult to get a coin onto Coinbase. So while the coin might still go down, absolutely anything can crash, you know that it's likely not going to be a scam if it's made it as far as Binance or Coinbase, right? It's probably a legit project because they do some housekeeping, they do some fact checking. Now, when you get into decentralized exchanges and swapping things on wallets, like say MetaMask, you are now in the wild, wild west, which means great gains are possible, but also anything goes to the negative as well. Projects can just straight up disappear, they can rug, the team can be fake, anything could happen. So when you get into the decentralized world, that's where you really have to do some heavier research, be in some Telegram groups, some Discords. I'm actually thinking about creating my own Discord for you guys. So if that's something you'd be interested in, drop a comment below. I have a lot of plans for this channel as we grow. So I really appreciate you guys hitting the subscribe button and joining the family over here. Number 13 is how I've made the most money that I've made in crypto. And that is, if something is difficult, go down the rabbit hole. If you feel like you're early, it's worth the research. Now, almost every big gain that I've had came from early on when something was really hard to understand or figure out. I got there early. For instance, trading from Ethereum to Binance, you had to use this bridge to this new wallet. It took a long time. And so not a lot of people did it. But what that meant is I was able to get into some projects really early. And then when they got listed on the exchanges that were much easier to use, I was already at a great entry and got huge multiples, huge returns on those things. Now, it's not always a coin necessarily. It could be trying a new game that maybe is going to have an airdrop. It could be investing into a new sector, like people that invested into AI earlier, even on the stock side, right? People that got into NVIDIA before it was cool are now crushing it. So sometimes taking that early risk, doing that bit of research, or most importantly, doing the things other people don't want to do or won't do can get you really far ahead in crypto. Number 14 is to evaluate meme coins wisely. Remember what we talked about with number 1. You want to make sure you're looking at the market cap, you're looking at the token supply. Those are basic things that you can understand. Now, we know when we get into meme coins, it's a bit of a casino, especially if you're looking at low caps. It's very risky, and these projects can literally rug in a second. In general, you want to be more in and out of them. They're not things that we're looking to hold for years at a time, sometimes not even hours at a time. It can really move that fast. And that's something that I got caught in thinking, oh, I can just go to bed and this will be around the same price overnight. Now, in normal coins, that is true, right? Bitcoin is probably not crashing 50% while you sleep for 8 hours. In meme coins, not so much the case. So even if a meme looks solid, if it's going up, understand that prices can change very quickly. And that's why it's so important, like we talked about earlier, to take profits when you get those wins. Number 15 is to capitalize on hype and don't overthink it. When a bull run hits, everyone's excited. They're going to follow the herd. And remember what we talked about earlier with buy the rumor, sell the news. So often I see people being like, yeah, AI is hype right now, and that's why I'm going to go buy NFTs and pictures of monkeys. And it's like, okay, that's not necessarily a terrible strategy. That could work, right? Maybe the focus is going to shift there, but why not put some of your money, invest something into what's currently hot and still going up, right? Now, the caveat to this is if you just missed it and AI has been hyped for a year and it's starting to tail off, you have to be aware that, okay, I missed this one. What's coming next? When I was first teaching dance, I learned something called the KISS principle, which is keep it simple, stupid, KISS. And when it comes to a crypto bull run, this is exactly what you need to do. Number 16 is don't marry your bags. For the love of God, please do not get emotionally attached to these projects to the point where you won't sell when you know it's the right thing to do. I see so many people do this. I did this myself. I rode things up 5x, 10x, substantial amounts of money. And I don't sell because I love the project and I believe in the project. Okay, great. Hold 50%, hold 30%, but sell the rest. Take your profits. People might shun you for selling from a project, but you know what happens in the bear market that I didn't realize? Everyone disappears anyway. So the people that were shunning you being like, oh bro, you sold at the top. That's messed up. I thought you were a real one, blah, 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 blah. When their bags go to zero, they're going to disappear. They're going to go back to their 9 to 5 with no gains, and you're not going to hear from them again anyway. So why are you considering those people's opinions into your investment strategy? Don't marry your bags. Number 17 is understanding the split of how you should invest your money. For me personally, I'm putting 50% of what I'm investing in crypto into large caps. That's Ethereum, that's Solana. At this point, honestly, I consider Doge to be not even a meme anymore. It is a large cap, billions of dollars invested into it, and Elon's support, I feel like it's fairly safe, we'll say, but I'm considering those large caps. Then about 30%, I would say I'm investing into mid caps. These are legit companies, $100 million plus market caps, right? They're not huge, but they're real teams. I've either met them or I've been on spaces with them. And so I trust them that they're working hard, but I know that they're a bit risky, right? 30%. The other 20% is where I'm taking my shots. This is meme coins. These are AI and gaming projects that I think have a really good chance to take off, but I know that anything is possible down here. So I'm kind of considering that 20% like it doesn't even exist. And remember what we talked about earlier, as you get some wins here, move some of that money over to the big stack. The goal is to get as high of a percentage into the safer assets as possible. So if your meme bag goes crazy, you move some profits over and now you're 52 or 55% allocated to safer large cap projects, but overall your portfolio is higher and you have less risk. That's win-win across the board. And that's how we build a strong portfolio. Number 18 is my least favorite one, but that's to account for taxes. And as boring of a topic as this is, it's legitimate. And I have seen so many people get gains, do really, really well, and not realize that they were going to have to pay taxes on those gains, start reinvesting all that money. Things go down and they get into a difficult situation. So I try to provide transparent education on this channel. And so I just want to put this one in there that as you're investing, as you're making wins, make sure you do pull some things out for taxes because you are going to have to pay on those transactions, even sometimes if it's crypto to crypto, even if it's interest, all just the same way you would with traditional assets. Crypto assets are also taxed. Number 19 is a little bit more subtle, but I know we're going to get deeper over this run, especially on this channel. So I want you guys to understand something that's called token unlock schedules. And a token unlock schedule is basically when people invest into a project really early on, the token comes out and they get a certain percentage or amount of the token as an investor. But I can't sell it immediately, right? So what happens? Say I get 1,000 tokens. I get an unlock schedule that says something like, when the token is created, you're going to get 15 or 20% of your supply, right? So 20% of 1,000 tokens is 200 tokens. I get 200 right away. I can sell those the second I get them. I can hold them. I can do whatever I want. Then it might be over the next month, you're going to get 50 tokens a month or 100 tokens a month. But what it could also be is when we create the token, you get all of your tokens. You can just take them and sell them and dump them, right? That's not as common. Usually there's an unlock schedule. But the reason this is important to know is a lot of people invested into projects last cycle that were amazing. They went in, boom, it's going up, but then boom, it would ladder down. Boom, it would ladder down. Boom, it would ladder down. People are saying, man, it's a great project. They got a good team. Why does it keep going down? And it's because the unlocks every month or 3 months were so massive. And the people that were getting the tokens unlocked were selling. They were dumping. Now, this is a little bit harder to figure out. And this is why you do want to do a little research, especially if you're getting into these riskier projects. Again, we'll talk about all this on the channel, but it's something to just have in the back of your mind. It's a surprisingly big factor that people don't talk about a lot that can push a coin down is those massive unlocks. So keep an eye out for that. And the last one, number 20, is the most important rule of all. I'll say tip, but it's a rule. The rule is all of these rules are meant to be broken. And that's the amazing thing about crypto is that it doesn't follow any rules. And while you'll think it's following a trend or it's headed a certain direction, the only thing we know is that we don't know. I can't tell you how many times I've seen the best traders in the world with all of their technical analysis and their charts and their line drawing and their strategic groups and all of these things predicting with so much certainty what move even something like Bitcoin is going to make and just be completely wrong. It is one of the most difficult markets in the world to predict, to time, and to be successful in. But if you use these simple strategies that I laid out, the tips that I'm giving you today, I'm telling you, you can win actually way easier than you think in a bull market, right? Because a bull market, things are going up. And as long as you play into the trends, you play into the popular things, you buy the rumors, you sell the news, you take profits, you do some research, you understand market cap and token unlocks, you understand supply, and if it's inflationary or deflationary. These are all things that you need to understand so you can make very simple decisions on this looks like a good buy right now. It's going up. I'm going to take some profits. Okay, now is a good time to sell. And when it's done correctly, it seems oh so simple, so easy, but yet 95% of traders in crypto will lose money this cycle. So guys, I hope this has been helpful for you. If so, hit the like button, leave me a comment below if you're new to the channel. I'm going to try to be posting a little more often on this page, especially as we grow. So your support really means a lot. I'm Matt Stefanina, and I'll see you on the next video.